Good morning, everybody. Welcome to the latest instalment of Talking Bull. I'm Joe Neighbour from Signal Centre. It's the 20th of October, and this is episode 480 of Talking Bull. So it's no Steve today. He's going to enjoy a couple of days of relaxation. So just me. So I'm going to rattle through as many charts as I can and give you a bit of an insight into what we're seeing from a technical perspective, and also round up the latest news as well. So first up, in terms of corporate news, Facebook is facing increased scrutiny over its business practice. It's planning to rebrand the company with a new name that focuses on the metaverse. That's according to The Verge. The original Facebook app and services may remain unchanged in their branding, positioned under a parent company that counts billions of users and other brands across other brands as well, like Instagram and WhatsApp. Google already operates a similar structure with its Alphabet Inc. parent company. So that could be quite interesting. In terms of what's going on in the UK, Prime Minister Boris Johnson predicted a difficult winter due to coronavirus and other pressures on the National Health Service, as his government acknowledged worsening data in its pandemic response. The UK reported a further 223 deaths within 28 days of testing positive for COVID-19 as of Tuesday, which is the highest figure since March. There are no plans at the moment to bring in the Plan B, which could include compulsory face masks and advice to work from home. So hopefully we get these numbers under control pretty quickly. In terms of what's going on the corporate front, again in the US, there are high expectations for Tesla's Q3 earnings, which are due after today's US close. Elon Musk's electric vehicle behemoth released record high quarterly deliveries earlier this month, even as the car industry is scrambling to cope with chip shortages and very stretched supply chains. So there's going to be a few questions along the lines of how did they do that? That's according to Morgan Stanley analysts, and we'll be waiting to see what happens on the close later today. In terms of overnight price action, we saw the Japanese, Australian and the Hong Kong markets all with positive sentiment. They were carrying on from where the US left off at 9 p.m. last night UK time. We are expecting to see the Fed taper and the Bank of England hike in November, and that seems to be doing very little to dampen sentiments for stocks, which continue to push higher. In the UK today, we've had a number of data points out already. We've seen inflation start to ease off ahead of the Bank of England talking about rising interest rates as of next month. The CPI went from 3.1 to 3.1 from 3.2, so a slight easing there. And interestingly, the RPI figure continues to rise with the latest reading of 4.9, proving that the process of passing on cost to the consumer remains in motion for now. So going to start off on the charts now, starting with FX. This is the dollar index chart. So this continues to trade in a bullish channel, as you can see, highlighted by these yellow bands. We've seen a little bit of a pullback in recent sessions to find support at this 93.73 level, which seems to be doing a pretty good job. Yesterday, we did see price dip below that level, but then it rallied to close back above it. And we are posting a bit of green today, up by 0.05%. So very early in the session. Still need to overcome these big resistance levels above at 94.47 and 94.74 before we can start getting a little bit more excited about where the dollar index may head. But in the short term, it still looks bullish for me, and dips still look like they are being bought. If we look at some of the riskier assets, I've been quite blown away by what we've seen in the likes of Aussie yen, just smash through all of these resistance levels here, completing a really nice inverse head and shoulders pattern. We're now back up at these highs that were posted back in May. So we've touched that this morning, rallied bang into the level, and a little bit of early rejection there. So we'll have to wait and see whether or not we're going to see any calling off. I think this is the 10th straight day of gains. In fact, that's probably not the case because there is a little bit of a doji in there, which looks little bit red to me. But looking very strong indeed. Yen just so weak at the minute, and it's having quite a profound effect on a number of currencies linked to the Japanese yen. So into a big resistance level here at 85.80. Technically, I'm looking at that thinking that looks like a bit of a fade into these resistance levels. Very good risk reward. Obviously, the underlying trend is very bullish, so don't expect there to be magnificent returns. But if you are a scalper or looking for an intraday opportunity, then maybe there could be something on offer for you there. Looking at Aussie dollar, that's trying to break above these resistance levels here. Again, another band of resistance that I've got drawn on here, multiple resistance levels, and it seems to be trying to get above that today. It's very early in the session, As it stands at the moment, we are above it. In order to get a confirmation, I'd like to see really a close above this level. And if we do, then I think we've got a pretty nice looking double bottom pattern there, and we can start looking for higher prices. So that would really kind of invalidate this bearish scenario that we have over here, and we can start looking for higher prices. In terms of where prices could potentially go, when we're looking at double bottoms, what we do is we measure from the low of the pattern to the neckline of the pattern, and we project that higher to give us a bit of an indication on where price could go. And the 100% level is up there at 78.50, so could be some serious upside potential in Aussie US dollar in the short to medium term. I also like to see if we get any confluence on these levels, looking at sort of Fibonacci levels. So it's just above a 78.6% fib level. So there could be a good area to target up there on the upside over the medium term. Still got lots to do, very early in the session, but I like the fact that it's trying to break above that level right now. Let's look at cable. So that is stalling a bit today. It's broken through this downtrend resistance quite convincingly. We've got some resistance levels up here to potentially target now at 138.91. Bit of weakness today on the back of these numbers that we've seen out from the UK today. The chart's still looking a bit messy here for me on cable. I need to have a redraw of this and get it a bit clearer in my mind as to where I think price might be headed. But it seems to be the same old situation really with cable, and it's going to be quite difficult to trade personally for me in the short term. So maybe best looking for other opportunities. Taking a look at euro US dollar, this is the flip of what we've just talked about on the dollar index. So this is rallying into resistance levels. We saw it try and get above this 116.63 level yesterday, and it failed and was printing a bit of red today. So maybe what we're going to see here is a continuation lower in euro US dollar. So still looking bearish for me on that front. Again, just to highlight how much weakness there is being seen in the yen currencies, really huge push to the upside again in New Zealand dollar, Japanese yen. One-way traffic, no signs of it really stalling. I'm going to have to go back some way to the left-hand side to try and find some previous resistance to think about here. So if we just look at that high as a starting point, we're above that, so that's not worked. Take that high there. Yep, so we're looking at 82.70 as the next level, and then we've got three levels here that seem to have touched quite nicely. So that's the big resistance level up there at 83.74. So no signs of this slowing at the moment. Euro yen looks quite nice. I talked yesterday about this range and consolidation that had formed. And again, we looked for a measured move by taking the measurement from the low of the move here to the high, projecting it higher, and pretty much to the tick, it's rallied into that target at 133.53, posting a pretty interesting looking candle now, shooting star candle into that level. So maybe an opportunity to fade this today, given how strong it's been. We've had 1, 2, 3, 4, 5, 6, 7, 8, 9 candles in a row of strength, and potentially bucking that trend today. Early in the session again, but looks quite interesting nonetheless. So moving on to some other asset classes, let's take a look at Bitcoin. Steve's been across this recently and has been pretty bullish on where things are headed. So we're rallying into these previous highs that we saw back in April at 64,899. We pulled up just shy of that yesterday. We are seeing a small bit of weakness today by 0.5%, which isn't really anything to be overly concerned about, I don't think, at this moment in time. So we look as though we're going to challenge that today, and we're looking for a reaction around here. If we can get a nice push to the upside beyond this, to negate this resistance level, then that will obviously give the bulls more encouragement. If we start to see some stalling around here, then anyone that's technically minded and trading Bitcoin might think that's a good opportunity to take some off the table and take some profits maybe, or potentially fade the move on a speculative basis. So keep an eye on that level today. Looking at oil, well, nothing really stopping this at the moment. We've got a couple of resistance levels up here at 84.99 and 86.39. We have to go a long way back to see where they are relevant from. We're going back to 2012 and 2013. So we are stalling a bit today on oil. As it's shaping up at the minute, we are engulfing all of the gains that we saw yesterday. If we go on to form a bearish engulfing candle, then that may be a little bit of ammunition for people looking to fade this move. Any speculators looking to try and short sell this in the short term. One thing I did notice on the intraday charts, which may be of interest for those who trade on a shorter term time frame, is that we could be in the process of forming a double top here on the short term oil charts. So we are rounding off a little bit at the top. We've got two tops here, one here, one here. We've got a neckline here at 81.08. That's what I've drawn. And obviously technical analysis is a subjective topic. So this is where I believe it needs to break in order to complete this double top. If this double top completes, then we're looking for a measured move target down to 79.12. And we've got some reasonable support levels to target down here. So that could be a good one for any short sellers or people looking to fade oil, or maybe even an opportunity for those that have been riding this rally higher to think about trimming some profits. It is only a potential double top at the moment. It hasn't completed. I need to see an impulsive move through that 81.08 to be convinced that the double top will have in fact completed, but worth keeping an eye on. Gold and silver have come to life a little bit in recent sessions, obviously helped by what we've seen on the dollar, which has corrected a little bit. For me, gold still looks quite choppy. This is the daily chart. We're sort of trading in a bit of a range, still prone to some big candles in both directions. And I don't think there's many opportunities, certainly from my perspective, on this at the moment. So be careful if you are trading this market. I don't see there as being a huge amount of opportunity right now. Silver, on the other hand, does look a little bit more interesting than gold. We've fallen into these key support levels down here. We saw a nice reversal, which has pushed higher. Potentially a little bit of bottoming price action taking place here. If you squint really hard, you could argue that that's maybe a very small inverse head and shoulders and that we are pushing higher to the upside. So silver over gold for me at the moment. Just going to quickly see if there's any trend line here that we've broken through. Obviously this is pretty short term, but that looks quite nice to me. Nice break to the upside and looks to be pushing higher. So maybe a little bit more legs in silver from here in the very short term. Moving on to the indices now. So FTSE continues to trade up at its highs. It's actually one of the better performing markets at the moment. And that's after really months of it not being at the races compared to, particularly the US markets, for instance. So FTSE remains elevated up at this 72.35 level. The reason it's doing so well is that the FTSE 100 index is made up of a lot of oil stocks that have a very big influence on the index, a lot of mining stocks who are obviously raw materials and commodities, and also a lot of bank stocks. Now, bank stocks are gaining traction because there's obviously the talk of the rate hike in November in the UK. Which means obviously banks can start charging more for lending, and anything they've got in deposits they will get more interest from. So that is a good thing for banks, and that is why we're seeing this index up at elevated levels. Clearly, it looks like it's stalling here. Needs a little bit more impetus to try and break through. I'm still a little bit concerned by this candle here that we posted on the 18th of October, which was a bearish engulfing candle. So maybe, we haven't got the legs at this attempt to break through, but overall, the outlook still looks quite positive for the FTSE 100 at the moment. Looking at DAX, that's regained some momentum. Obviously, you can see the differences between this and the FTSE 100. The FTSE 100 is at the top of that range at the minute, whereas the DAX is just bouncing off of the lower end. Looks still quite positive to me. I wouldn't be surprised if we see a retest of this 16,031 level in the very short term. Momentum still looks pretty good for me at the moment. Looking at the US indices, well, as always, these have bounced back pretty strongly and pretty robustly. We are in the midst of earnings season at the moment. We've got Tesla reporting today after hours. We've got Netflix, obviously, that came out last night. Still looking pretty strong. We are targeting now these highs up here at 15,708. And you'd be a brave man to bet against that, to be totally honest. It's obviously very strong, and demand remains very strong for these tech names. And they seem to be coming in with some pretty robust numbers given the economic outlook at the moment across the globe. Okay, looking at the S&P 500, again, similar situation, probably looking a little bit better than the Nasdaq. It's sort of very much closer to the highs at 4,551. Again, we look set for a retest of that. We did see a break of arguably a wedge, but again, very short-lived. Dip buyers very keen to get back involved there, and we look as though we're going to be challenging those highs very soon. Okay, I think that's it. All I'm going to do on the charts hopefully that was insightful. Moving on now to the gun to the head trades from yesterday. Not seeing a huge amount of volatility, which is having an impact on our trade. So yesterday I tried to fade the strength that we've seen in Aussie US dollar unsuccessfully, I might add. It was down 0.42R at the 9 p.m. close yesterday. And Steve was also looking for a same direction trade with regards to Oz, but unfortunately was stopped out in his trade yesterday. So going to try and pick us a winner today if possible. Just having run through those charts just now, I did like the potential for the yen pairs, given that they're into some key resistance levels and posting some reversals. I think the euro yen one probably looked most appealing. This is a daily chart, so what I'm going to do is try and target a short sell on this, and I'm going to zoom into the hourly chart to try and find a better entry on this. So we are currently trading at 132.98. So that's where I'm going to set my sell. I'm going to place a stop loss above the highs, hoping that this shooting star candle holds. That's going in at 133.52. And then it's a case of looking for a decent target where the risk reward is in excess of 2 to 1. Often what I like to do is use the ATR bands, but they're pretty close by. So going to just move that down to, let's go to 131.50. So looking for 2.77R on that one. I just have plucked that level out of the air, to be totally honest with you, but hopefully that will work out and we'll see some reaction and a continuation of selling maybe on the back of this shooting star candle that seems to be forming on the daily chart at the moment. So that's my trade of the day. Okay, so numbers to watch out for today. We've got the Canadian CPI number, which is due out at 1:30 UK time. Price is expected to rise 4.1% year on year. At 3:30, we have the US EIA crude inventories number. Stockpiles rose by 6.1 million barrels in the previous week. So keep an eye on the oil chart. So I talked about this double top. I've got it back up on the chart again right now. This is the intraday chart. It's an hourly chart. Potentially a bit of a top forming there in the very short term. So keep an eye on that. Obviously, crude inventory numbers at 3:30 p.m. UK time will be very important for the setup of this potential trade. Okay, that's it from me. Keep an eye out also for Tesla numbers after hours tonight. If you are trading, trade safe, make sure your risk management is on point, and I'll be back tomorrow with some more roundups on the charts. Until then, trade safe. Goodbye.